Alright guys, so in this video we're basically going to be tying everything together. You've learned about stop loss placement, you've learned about take profit placement, and you've learned about different entry signals. Obviously in the next sections we're actually going to be going over the specific setups, but basically what I want to do is tie everything together that you've already learned, which is stop loss placements, take profit placements, and then our entries. So looking into the market here, we're going to be looking at the S&P 500 index, right? You always have to take into consideration obviously the trend and where the market is currently trading at. You know, you want to always look at the price action and everything else, but as of right now, for the simplicity of this video, what we're simply going to be doing is basically looking at stop loss placement, take profit placement, and then entries, and how you could formulate and put those three different concepts together to ultimately capitalize off of the moves you see in the market. Now for me, I trade a 5 and a 15 minute time frame. I mean, I use all of my time frames together, but I predominantly trade a 5 and a 15 minute time frame. So in a situation where I see prices overall going bearish and we've broken under a major area of support and prices pulled back into that previous area of support, what I'm going to be looking at is, one, where is our previous low in the market? I'm going to be identifying the actual trend. So our previous low in the market after prices actually pulled back is going to be down here. What we can also identify is that price had actually broken under this major area of support. This is already going to create a pretty good probability for price to continue to go down, because price is actually rejecting this previous area of resistance here. Now there's multiple examples that we can actually look at here, but again, what we're going to be focusing on is entry, stop loss, and take profit placement. Now, in this situation here, what we actually see is price pull back and give us a rejection of our previous area of resistance. Now, obviously, if we were in session, this would be a pretty good entry signal here. Now, in a situation where, let's pretend like we don't already know what's happened, in a situation where you see this rejection that we have over here, and we see this over here where notice price broke under, came back above, and then continued to go down, your stop loss placement should be above the highest point that price actually gave you when it rejected. So since this is pretty close in proximity, I'm going to take an aggressive entry position right off of this rejection that you see here, and my stop loss is going to go above the high over here where we had price break under, form a high, and then continue to go down. That is going to be a safer stop loss placement. Why? Because I'm taking into consideration that my take profit is going to be all the way down here. So I can be greedy and place my stop loss a few points above this resistance that we've seen here. But since my target is so big, I want to allow price to actually breathe and be able to give price room to actually consolidate before going down. So in this situation, if price breaks above this high here and our current high, then I'm most likely wrong anyways, and I want to exit the position, and that's going to be here. Honestly, stop loss placement is always going to be very subjective to the position that you actually take, but one thing that should never be subjective is your targets. Your targets should always be the next low, anywhere between the range of the close and the lowest point of the wick, which in this situation, I sold that resistance in a downtrend off of an aggressive entry. My stop loss was right above resistance, and my take profit was the nearest area of major support, which, as you can see, that position was actually then hit. Now let's kind of continue here. Now let's say in this situation we actually see price break back above this major area of support here. We're going to zoom out and identify where our nearest major area of resistance here, because now we're looking to buy. So since our next major area of resistance is going to be this entire range that we see here, this is where I'm automatically going to look to take profit at. This is where I'm going to be looking to close my position. Now, if we see that price gave us a nice entry opportunity here, call it that we see price ended up coming down, giving us a rejection, or coming above and giving us a conservative entry method, let's say that we would have taken an aggressive entry method, because if you would have taken a conservative entry method, again, you have to see price give you a close above the highest high. In this situation here, since we're buying, we're going to be looking to take a close above the highest high right about here, with our stop loss under this low right here, the lowest point price hit before moving away from the actual support range. So I'm going to give you guys two examples here again. Right, in this situation, we're barely going to squeeze a 1.5 risk to reward ratio on a conservative entry method. On an aggressive entry method, where you could have potentially taken a position, let's call it right here, because I had that 50% close above, you would have made potentially a 2 to 8 risk to reward ratio with your stop loss under the lowest point that price rejected before moving away. And again, our take profit is our nearest area of resistance, which is going to be over here. Now notice how I could get greedy and say, yeah, you know what, I'm going to shoot for this area of resistance all the way up here. Price has a lot higher of a probability of hitting your nearest area of resistance before doing anything else. So when price has a high probability of hitting this area, that's where you want to take your money off the table, because look what happened shortly after. Price had a huge pullback back to break even, or ultimately, I mean, it would have hit this target, but you could have closed this trade here and gotten out very safely on a perfect kind of exit here. Notice my stops were under the lows of support, the lowest point price had actually reached before going up. Entry method was an aggressive entry over here, conservative over here, and my take profit was nothing greedy, high probability take profit at my nearest area of resistance. Now, I'm going to give you guys an example. Let's say that price on this bearish candlestick would have came and gone all the way down to here and then closed up here, rejecting support, and price would have actually came down and rejected support here. What I would do is I would put my stop loss under the second lowest point, because this could have been a liquidity grab, this could have been news. You don't want to kill your risk to reward ratio for no reason. Remember, you want to set your stop loss in an area that will invalidate the trade. So that's going to be subjective to you and what price action looks like at that moment in time. So that's another example over there. Now, I think what we could do is set another example over here, kind of on a counter trend, just to give you guys that example. So along this area, we have our major area of support. Now, we can take an aggressive entry signal off of this area here, which is not the strongest aggressive entry signal, but you can definitely take it. If we tie down like our 5-minute time frames and use multiple time frame analysis to see what's going on here, we can also use that as well, which essentially we see a little bit more details in price action. But for the sake of this video, I'm just going to kind of go off of this area here. So now we've hit a major area of resistance and we have our aggressive entry signal. We could take the position right then and there. Let's call it right here is where we're going to take the position with our stop loss above the high here. In this situation, I wouldn't, since price like literally tapped into resistance and rejected right away, what I would do is I would kind of place my stop loss at an area where the risk to reward makes sense and the stop loss still makes sense. I'm not going to place my stop loss all the way up here, but if I place my stop loss kind of like around this area right here, I'm still going to get 3 times my risk, which is perfect. So this is where I'm going to set my stop loss here. Because remember, like in this situation, since price kind of tapped into support or previous resistance and it rejected, you still want to give price enough room to, let's say if price were to go for another retest, you know, it can definitely go above, and that's where you'd want to give stop loss a little bit more room to actually breathe. Now, let's say you would have taken an aggressive entry or a conservative entry here as well. Stop loss goes in the same exact place, and in this situation, you've actually could have placed your stop loss a little bit lower, but for example purposes, it would have gone up here. Your target is still going to be your nearest area of major support, which is going to be our previous area of resistance, which I could have targeted my major area of support. But again, it comes down to probabilities. Your nearest area of major support has a lot higher probability of getting hit before your major area of support or resistance that is a further distance away. So in this situation here, we would have gained probably 3 times our risk. Over here, you would have gained 1.3 times your risk. So you could just kind of see the pros and the cons of the stop loss placements with the aggressive entry and the conservative entry. But again, your goal is to, if you take a position, you're taking your trade at resistance or at support, your stop loss has to be above that resistance range, because when price goes above your resistance range, your stop loss is at an area where it will invalidate the trade and you will close your loser short. If you're buying, it's vice versa. Your stop loss is at a place under support where if you take the position, price will then come down, invalidate the trade, and then close you out of your trade. Remember, the key component to stop loss placement is your stop loss placement has to be at an area where once price hits that area, your trade is no longer valid. And your targets are going to be the nearest area of support or the nearest area of resistance. And if you have a positive risk to reward ratio with your buy or sell signal, then that's when you use those three key components together to ultimately give you a high probability trading setup.